our companies are investing aggressively now because they see enormous opportunities, whether it's in the genomic space, the robotic space, energy storage, artificial intelligence, blockchain technology. And when you think about artificial intelligence, I think for us, and all we do is focus on innovation, the biggest surprise to us in the last 3 years is the amazing set of breakthroughs in artificial intelligence. We've got AI costs. We've got AI moving more than twice as fast as Moore's law. Costs dropping 60% per year if you account for both the hardware and the software. When you get the cost of something dropping that much and to levels that are much more accessible and affordable, you're going to have an explosion in creativity. And that's what's happening. What has happened to our world, our traditional financial world, is intense risk aversion caused by, first, the tech and telecom bust in the early 2000s, and then even more so after 08, 09. And what does risk aversion mean in the traditional world? Risk aversion means get close to your benchmark sensitivity. So we have, I think, one of the most massive misallocations of capital in the history of mankind. You have investors investing in the past. Benchmarks are where they are, and especially the largest companies and stocks in the benchmarks are where they are because of past successes. If we're right, those are the companies that are going to be disrupted. And you can see, if you look at large cap growth portfolios or large cap any portfolios practically, you'll see many of the same stocks. But in growth, you'll see the FANGs, you'll see Microsoft, you'll see NVIDIA. You'll see Tesla because it was put in the benchmark finally. The only one we overlap with is Tesla.
Why such a reticence, though, to concede that some of these stocks that have suffered dramatic declines will never come back to the level at which they once were? You won't concede that? You think all of these stocks that I read on that list, plus others that are down by significant amounts as well, are really going to come back to the prior levels they were? Absolutely.
And beyond. You'll notice what we do during risk-off periods, and this one has been particularly long, 1 year, which has taken our stocks into bargain basement pricing, I'll say again. But the names you read have migrated into our top 10 because we have concentrated our holdings towards our highest conviction names. And most of the names you read are in our top 10. I think many of them are platform companies. Many of them are going to harness artificial intelligence in a way that others cannot. I mean, Tesla has been the best case in point, and I think we have a lot of Tesla-like stocks in our portfolio. We're really looking for companies that are going to use artificial intelligence and create competitive advantages that no one will be able to catch.